Welcome to my channel. This week we had a pretty dull run with respect to the overall broader markets, and it has been pretty volatile as well. Nifty 500 had a nominal returns of minus 1.32% on the week, which is negative, but ideally we had anticipated that the current week would be volatile for sure. Now, what could be the next stages or next steps of action here? Coming to the broader market, Nifty 500, it continues to be a bit stable at this point, and we will await the outcome of the US oil prices altogether, which is going to define what is going to happen with Indian economy or stock markets in the coming days. So my anticipation is the market is going to be volatile further for like a couple more weeks or maybe a month or two. Post that, we can definitely see some signs of recovery which will be coming into the market once things stabilizes and the moment US-Iran war will be decided out. Now moving on to the other sectors of the market, over here the reason for major drawdown was with respect to Nifty IT. As you can see the charts, Nifty IT has been beaten pretty badly in this week. Overall returns of around like minus 5.29% in a single day, and one big candle of around like 11% fall in a week. This is literally devastating. Now, winter is coming for sure in Nifty IT here. This is very highly likely saying that we are going to see tough times for Nifty IT sector and the overall space, especially owing to the quarterly results where HCL Tech performed pretty badly, and that is impacting other companies as well in parallel. So, broader market or the smart money is anticipating that Nifty IT is going to face tougher days ahead for sure. So, brace for the winter in Nifty IT sector. Now, moving on to other sectors, Nifty Pharma is pretty much holding well during this phase. As we can see, the structure is good, but still this is a defensive sector, and we don't see any kind of outcome as in terms of breakout or anything which is going to come here. So this is one sector which I'll be just monitoring over time and see how things pan out. Again, Nifty Auto, it is pretty much okayish. I'm not again fan of this kind of setup which is coming in here. I'll wait for the time to unravel things, but I'm not hoping for any strong movement within Nifty Auto. The same goes to Nifty Healthcare, and I'm not anticipating any kind of returns. And one thing what you can observe is like Nifty Pharma and Nifty Healthcare are pretty much intertwined. The way both of them move are pretty much closer or aligned with each other. I would wait out for any kind of actions until the breakout happens within Nifty Healthcare. And Nifty India Digital, I would currently avoid definitely for this space because again, this is kind of intertwined with Nifty IT and the price action is pretty weak here. Fundamentally as well, this is not a space which I can invest in the coming days. I will definitely wait it out until things happen out or I see a strong price action overall. Now, as a result of these movements within these dull sectors, Nifty is being held up at 50 days moving average. There has been a slight rejection here, and I'm anticipating one more pullback until the region of 23,000 or so. If it happens, that would be a pretty good opportunity or the lost accumulation phase for me as per my investment plan, which I'll be executing. And in the past week, we have seen that JPMC has downgraded Indian markets, and in the past, it has been the case. If you observe the history, the credit rating agencies tend to downgrade the markets, especially Indian markets, but they don't tend to give the direction properly. See, earlier there was a call out saying that Indian market has been downgraded in the week of 30th March. So that is when there was a comment from my end saying that whenever this kind of downgrade happens, we tend to buy. Let me share an experience from my past here. In the year of 2022-2023, a similar situation occurred. In the year of 23, when there was a certain rating agency, which downgraded Indian markets and gave a target of 14,500. But Indian markets were at 16,500 odd. And as an investor, I was waiting for the dip to come. But clearly, Nifty gave a pivotal U-turn and it started moving upwards. So when these kind of negative news comes into the market, when the market is making the smart money is trying to sell in the negative news into the market so that the retail investors get panic and they tend to exit. So this has been the strategy from the past. This is my observation. This is not a clear-cut income or a guidance point what I'm trying to share, but this is what has been my observation. And again, with respect to JPMC downgrading so far, 7 out of 10 times in the past, this has not been the case, or it has been always at the point when market is at the bottoms, they tend to sell the negative news, or they tend to sell the fear. So in my perspective, I always buy the fear and sell the greed. So currently we are in the fear phase. I would wait out until the dip happens. If at all, if it comes, I'll slowly accumulate the ETFs basically with respect to Nifty 50. Now moving on to the strengths, the pocket where the money is moving around, I'll move on to the commodity sector, wherein I can see the Nifty metal part, which is outperforming really well, and I continue to monitor my investments over here. Again, Nifty mid select, which is the part of Nifty mid cap, this is showing promising signs here. I'll definitely look into the space in for my future investments. And coming to Nifty microcap, this is also going to show some strength. It's already displaying it, and we are already at 200 days moving average part, and we can see a trend line which is bending down from top, and Nifty microcap tends to might break it out and move ahead from here. Nifty midcap as well is going to show some strength, and my next observation phase is purely with Nifty junior. See, Nifty junior is nothing but Nifty next 50. So this space is giving or on the verge of giving a clear cut breakout. I love this setup. See, the market has pulled down and again it has tried to come back. There is continuous continuous moments of buying here, and again there is one more pullback which has been bought even before the previous low was broken. This is a wonderful setup in my perspective. So I will anticipate one more pullback here and again one buying setup. If that happens, that clearly gives this sign saying that market is ready for next leg of uptrend. Now, why do we anticipate that? See, this is Mark Minervini's VCP pattern, that is volatility contraction pattern. From the past, we have seen that whenever market pulls back and tends to make a U-turn, so we see a phase of a U-shaped returns which is happening. That is nothing but the volatility is reducing in this space. Now we can see the phase here. See, this is the pattern which I was talking about, which is called volatility contraction pattern. So over here, the correction tends to finish at the certain stage. Over in the initial phase, we can see the volatility is looming in, and again in the second phase, we don't see the exact pattern, but we can see the price pulling back to the certain point and again moving up. And in the third phase, I'm anticipating one more setup similar to this, which is going to give me the confirmation saying that yes, we are in such a similar phase. I'm not telling that the price has to end up here exactly. It can end up anywhere in between, but a certain pullback and again run up, which is going to confirm my conviction saying that price is going to move up further strongly. So that is the pattern we are supposed to identify, and Nifty Junior is perfectly setting up for a similar pattern, which is my conviction saying that yes, I'm going to invest more if that pattern appears over here. That's one learning. And moving on to Nifty small cap, I see a similar pattern setting up here. Again, one more pullback and breaching the line. It is a clear cut setup for us. Now moving on to Nifty India defense, this is one space which is showing strength, and again in the future we might see something which is coming up in the terms of bull run. So this is another space which we need to follow up. Now coming to Nifty Energy, as I mentioned earlier, my investment over here has been completed, and I'm holding on to the phase where I can see pretty much nominal returns in the coming years. Now one surprising index which we have missed out over time and which has given a fantastic returns of 65%, but it is not totally with respect to Indian markets. I'm talking about the Taiwan index over here. Basically, you can see this index has continuously outperformed the other broader indices with respect to the global indices. Now I'm going to just give you a percentage of look on how it looks like. See, in the recent future from August 25, or let's say in the month from September 2025 till date, it has given an outstanding returns of 60+%. If we were smart enough, had we been clear cut, we could have caught this kind of move. And these are the things which we tend to miss out, and that is the reason we need to monitor the price and the global indices consistently. So had we allocated the amount of money what we were trying to, I think we could have made pretty good returns over here. So this is one thing which I have learned over time, saying that monitoring the markets from a broader perspective, especially with respect to global macros and global indices, matters a lot. And we could have allocated, basically I could have allocated some amount of money which could have made or given good returns over time for me, despite US-Iran wars and global macro conditions pressurizing the overall investments. That's a learning for me altogether. So yeah, that's all. Thanks for watching my video. Please do share, like and subscribe. Thanks once again.